Do we have a problem in the debt market? Jamie Dimon seems to think so. And on top of that, there are only a few solutions to the issue. In today's video, we take a look at what they are and what could be coming to set the next rocket ship underneath the markets, and why the monthly closes in particular matter for all of us. With dark pool liquidity and liquidation starting to occur, we've just seen some of the largest trades ever performed on some of the hottest stocks right now. Join us today in our special weekend edition as we cover stocks, commodities, and cryptos for the weeks and months ahead. Guys, this one's not to be missed. We'll see you in just a moment. Well, welcome back everybody to The Daily Show. My name's Tom, and in today's video, we'll be discussing the latest macro, the big data, and of course, those key flows, because boy, oh boy, were there some big transactions that came in near the end of Friday. Let's kick things off though with what's going on in the debt situation of the world and why we need to be paying attention. Now, I'm sure all of us are aware by now that, of course, US treasuries are held by a particular couple of countries. Of course, it's always been big in Japan. We've seen huge movements in China recently with them dropping, although it's considered that some of these probably are China. And the UK, for the first time in ages, has now taken over as the second largest holder of US Treasury debts. Now, why does all of this matter? Well, it comes back to what we're starting to see, which is countries like Japan potentially saying, hey, we might be selling some of your bonds if you don't give us a better tariff deal. But really the story is in the yields themselves. And as you're about to find out, there's some massive flows going on to do with these. We've talked about the US 30-year. Every time it goes past 5 and starts to accelerate, it seems like a massive call from the White House comes out. And we've also seen the JP40Y go off into the moon, and then something occurred as well, leaving us to say that if we don't see some type of reform soon, we could be in some trouble. Now, why is this? Well, US net interest expense as a percentage of total tax revenue is forecast to go to 25% by around 2032. Now, what this means is that 25% of all money coming in will just be used to maintain the interest on the debts themselves. And that's not to consider that the debts are increasing each and every single day. Now, of course, one of the ways that the big bankers are trying to get past this is that old chestnut from 2006, which is to deregulate banks in particular and deregulate the financial system. Take a look at this latest note we see here, and we posted this over on our X account as well, that says the Trump administration is preparing to roll back key financial safeguards imposed after the 2008 crisis in a move expected to benefit major Wall Street banks. This is a big deal. Why? More debt. What does debt do? Creates growth, creates speculation, and more importantly, creates super bubbles. So will we see this? Let us know in the comments down below. Do you guys think we're actually going to see this one? JP Morgan certainly is having no problems with their earning results right now, but no wonder people have been buying banks because, of course, as we've long speculated, this is one of the big deals of pushing us into really late cycle style markets where basically deregulation leads to very dodgy debt writing. And could that lead into another subprime kind of mistake? Well, on the channel, we'll be talking about that over the next 12 to 24 months in particular, because this could be just around the corner. If you ever want to find out more about this, by the way, we have an advanced masterclass currently on special down below. And I'm telling you guys, it will blow your mind once you start to look into the last 300 years of history and see how we kind of do these things fairly repeatably over time. It's all, a repeatable system. Let's talk flows from Japan. Equity funds were down big time. Japan flows absolutely getting smashed. Over $10 billion pulled from Japanese equity funds, suggesting that foreign investors are dumping risk. And of course, it's a crowded trade unwind. Is this part of this whole issue in the debt situation and system? I would say yes. Another problem that we're starting to see around a lot of Western nations is the housing market. There are nearly 500,000 more sellers than buyers currently in the US. And as we've already talked about this before, this basically means that prices are starting to tip over. And that's, of course, not what anyone wants to see, especially in the debt system. So what are they going to do? Deregulate, let you borrow more, and then hopefully get this differential down. In other countries such as Australia and Canada, we've obviously seen huge internal migration and immigration in general. And you can see here the latest numbers. Whoa, this is for Canada, but I was looking at this and I was like, is that real? Maybe some Canadian viewers could tell if it's that real, but that is an absolutely bonkers number. And that's, of course, helping to keep this whole thing alive for at least the period of time we find ourselves in right now. So what does this all mean? Well, we've just had an incredible recovery off, of course, tariffs on, tariffs off, tariffs on, tariffs off, tariffs on. And now tariffs on, by the way, back again with steel getting increased according to the latest reports. But what will the S&P 500 do next? Will it still continue to climb the wall of worry? Well, we've seen a little bit of a pullback. Obviously, based on some of these large volume trades, we may still be seeing another pullback a little bit soon. But in general, if you're talking the stats that we've just seen, where we went from a 3-month losing streak, then gaining in May, which we've now done, we have never actually been down the 1-month return forward. So this is a 100% read and a very bullish statistic when you start looking at it across the board. This could be down to two major things. One, the wall of worry. A lot of Wall Street are caught offside, obviously not having enough positions in. A lot of retail do, but we'll talk about that later. The second thing is that, of course, we've got deregulation now as a good news story, at least for a sugar rush. And of course, we still have that overimposing tax cut that could be good for at least corporate America. How does it all end? Probably not that well, but as we've already thought about before, we kind of are speculating that even if we're in for the reform style, which is between 200 and 250 days of the Republicans being in power this time around, that we might actually be looking at a potential fall off in markets. That's a possibility before maybe make a new high first. Or, of course, we could be in that 1990s, 1960s narrative where we're near the end. Whether we're in this one here, we're in this one here, or this one here is still the question mark. But, of course, the way the market is recovering shows us that there's a lot of inherent bulls. And, of course, there's a lot of inherent leverage. Because what we've all seen, guys, is leverage has constantly been going up, especially from retail. 3 times levered funds, now one of the most popular products from retail to buy into the dip. And rightfully so, I guess, when you're looking at psycho returns over just a few days and weeks. However, of course, if everything goes bad, you guys know they'll burn you very badly. Let's now talk about the biggest volume trades of the last week. Near the close, we got a massive one for the Russell 2000. Now, we've talked about this level a lot. We know we're at resistance for the Russell. It's been an underperformer. Small cap stocks, obviously around 36% of the Russell 2000 are made up of companies that make no money. And then, of course, on top of that, I think 20+% are made up of regional banks and smaller bank institutions. We see deregulation. You'd have to think that this market will go up. But take a look at this. We've got that inverse head and shoulders style. We have a huge trade. We obviously do not have a breakout. So if we do get a breakout off this pretty large trade, it could mark a pretty important point. Last time we saw accumulation, it ultimately led on to buys. And of course, we saw a massive dark pool at the top, and it ultimately led on to sells. So these can be inflection points for markets. Is it a buy or a sell? We'll soon find out based on the price action itself. What about the SPXL? This is a 3 times levered fund, so one of those leverage funds. And we've seen 3 monster transactions, the second largest, the third, and the fourth, all happening around these peaks recently, suggesting that someone's probably done a little bit of take profiting. And as we can see here, there are quite a few stocks getting similar reads. Netflix just had the largest ever trade ever recorded on it just go through near the close. That's a big one. On top of that, we had PLTR with the 3rd largest trade it's ever seen. Last time we saw a big trade, it had a little bit of a pause. In this case, is that a breakout one? Or was that a sell? Hey, we'll find out very soon. Obviously, we like to see price action confirm them. And we also got 2 monster trades in TSLT, which is a 2 times levered ETF for the, of course, Tesla stock. Now, is this, again, a bit of selling on that final run? We talked about positive gamma. We've obviously seen this huge first run, second run, and now everybody seems to see this 3rd run. But we're not under the support yet. But I tell you what, 2 large trades, are they buys or sells? We'll probably find out this week with price action. Of course, we'll be tracking it, so make sure to watch. Now, we do know when things get crowded, sometimes we go for a little bit of a pullback. Notably, of course, with Bitcoin, as we reported in our previous video, go check it out. We did have one of the largest retail traders go in and he went all in. And unfortunately for him, he got liquidated at around the price we find ourselves at right now. But look at these options open interests. We got a new all-time high for the amount of options in the Bitcoin markets. And obviously this usually leads into kind of temp points because it's a lot of speculation. So it may be that Bitcoin now consolidates and other alts start to come through, but we'll find out very, very soon. Central banks have, of course, been purchasing gold. You know, one of our hedges against kind of uncertainty and geopolitical risk has long been on this channel gold for the last 2 years. Obviously liked silver recently and Bitcoin, and we continue to like those. I think silver still could be looking for a breakout, but it hasn't happened yet. We'll report it when it does. Let's have a look at the S&P in terms of central bank liquidity. Liquidity was down both in the world liquidity and US liquidity throughout the last week. So that's a pretty interesting read. S&P 500 ended, I would say, relatively well. Like the close itself was fairly bullish. If you look at the weekly here, you can see it was kind of just in between. So there's no suggestion that it's going to heavily sell off yet. And you can see here the monthly was pretty exceptionally good. Coming back to the 6,000 level, the resistance and the most traded zone, but still not really giving us a clear sign of a doubling top, which would obviously be a break of 57.50 and then weakness to fill gaps, and still theoretically in an upward trend, even with this nasty rejection candle. And one of the key levels to watch this week that we'll all be watching together, I'm sure, is going to be 6,000. So if 6,000 is broken, we enter into positive gamma, we get through the most traded zone, and of course we go towards the next resistance, which sits at around 61.50 in terms of price charts. On the bear side, of course, 57.50 is the support at this stage, and a break of that, you'd be taking this as a double top, and then of course using that distance to really extrapolate out for gap fill. So there could be a lot of vol coming through, but at the moment we're kind of like in the calm before the storm. We want to see more large trades, more clear direction, and of course more flow movement if possible. Let's now have a look at the overall options. That was a pretty big expiration last week. We saw a lot of positive gamma and clearly people were buying puts. Why do I say that? Have a look here at the 2nd of June. What is going on? There are so many puts just suddenly appearing at 5,900 and below. And we find ourselves right on that as of the close. 5,900, tons of puts on the session, 58.50 on the next session. So of course, if we go underneath 5,900, it could create a negative gamma kind of like waterfall effect. The next stop would be 58.50 in terms of at least puts for the next session. But you can see here, there's this clear level where if the market could just sit around 5,900, 5,920, it'd probably be pretty happy in terms of making the most amount of premium. That is, that the market makers would make the most amount of premium. But there's a clear level of around 5,950, 6,000 as a call wall. And yeah, the puts, 5,900, then 58.50. We'll keep updating as we see it, but seems like each 50-point increment very important for the S&P right now. Tesla was in positive gamma. That was, it was above 350, and you can continue to see 350, 360, all the way to 400. Tons of calls, and around that 340, 330, the puts. So we've clearly got a level of support. We've clearly got a level of breakout call resistance. And I think if the market does move back around to being positive on Tesla, obviously, Elon's coming in the news again for maybe some of the wrong reasons. But in general, you know, if it does break up, and again, we have to ignore the news, we have to follow the flows. If that does happen, you'll see here that the options could feed upon themselves. Nvidia, 140, 135, still the same. You know, we didn't actually hold 140 post earnings. I think the earnings were pretty good. Most of you guys thought it was pretty good as well. They just don't disappoint, do they, that Nvidia? But at the same time, not able to hold above 140. Therefore not able to break to 148 at this stage. Looking for that break, then we might be able to get like that 165, 170, which would be exceptional. Maybe we need deregulation before that occurs. The VIX, the volatility index, as you can see here, dropped off. So basically people went from being super concerned about the bonds that was starting to spike back up to suddenly less concerned about it as we saw kind of some of these tariff negotiations continue. And yeah, just every day it seems to be tariff based, as you guys know, for the last 2 months. JP30Y, you can see the spike here in the bonds overall. So that's been pretty important in terms of a massive spike up. And the other thing that we, of course, have been looking at pretty closely has been the US 30-year, which is the 5% and we've gone back down to 4.9. So clearly that's come off a little bit in terms of the risks as we're seeing this deregulation. And the deregulation talk is leading to certain sectors doing a little bit better. So what we'll do is we'll load up financials here, and you can see financials near the end starting to move up. But I think more importantly, the regional banks, the ones that will probably get everyone in trouble ultimately, they were starting to improve. And this is another, it looks just like the Russell in many ways, rightfully so, because the Russell is a huge part of this. And you can see that we've got that inverse head and shoulders on KRE. So what if we see deregulation? That could get the real movement here in KRE. And of course, this I think could be one of those ones that starts to see flow on it. What do you guys think though about that? US dollar fell off for the end of the week. Weekly in particular was a nasty looking candle, big rejection here. And if the dollar falls down, if the dollar breaks through this 98 again and 98.50 zone, there's really nothing stopping it underneath there to the 96s, the 95s. There could be some big currency trades coming up and maybe even metals trades if the dollar is to fail. Speaking of metals, we've got gold, we've got 33.26 on the resistance, guys. If that does break back onto the upward trend, for now, I guess you could argue that it's neutral. The bear's kind of pushing down towards 3,200. The overall trend's still up. And of course, at this stage, gold still priced, I think, fairly at around 3,600 to maybe even 3,700 in the future. So it's still underneath probably what its long-term or medium-term goals are. Silver, on the other hand, still failing to go through this 33.60. My goodness, this level, it sucks. But I'll say one thing, it's coiling. And when something coils, if it does ultimately break to the upside, it could get ferocious fast. The real level for bulls is 34.50 though. This level here, that exposes significant paper contracts. And I think these paper contracts could push, if we actually see it, into the $42 on silver. So it could go absolutely ballistic. You guys know I think there's a bit of a sleeper in terms of the markets, but it's not without. Silver has been historically horrible. So even when I got into trading and investing, back in 2006-ish, 2007-ish, that period there, silver ran kind of hard to 2011. However, it has done nothing. You want to talk lost decades? Silver's been in a lost 40-year, 50-year decade if you actually go back to the 1970s. So this metal is, or this currency as I call it, is probably one of the worst performers of the last 50 years if you bought it at the wrong time. And timing is everything. But if it starts to run, as you guys know, the silver-gold differential is the interesting component here. So it's going to be one of those things, I talk about it a bit. If we see a breakout here and silver starts to outperform gold well, the dollar starts to drop. Some interesting times indeed. Tesla, you can see here rejection near the close. Markets did sell off a little bit near the close there as some risk came off. We saw the tariffs obviously increase on steel. Not great for Australia, where I'm from, but we'll see how that plays out. And you can see here the weekly was weekly nasty, But if it does close or move above this, that's going to create short squeeze. And of course, going to positive gamma, next level will be 400. But you can't deny it's not a great candle. It's a shooting star happening off a point of around resistance as everybody turns bullish on robots. And of course, the moves before that, everyone was bearish. Everyone was bearish. And the flows were looking good. And then all of a sudden now everyone's bullish again. Yeah, the chart doesn't look bad, but kind of like, are we actually going to move that much higher? NVIDIA, you can see here, it broke to 140 plus, couldn't hold 140 plus, and therefore moved to the 149, 150 core wall. But it's still in that breakout period. And we have a lot of technicals right now where markets have consolidated, similar to Tesla. They've rallied, looking very, very nice, and then they've pulled back. So this week is going to be imperative that the bulls control some of these levels. Otherwise, we're looking at, more significant downturns. The stats wouldn't agree with the downturns, but the price action flow could do that. US oil, you can see here, it has been mostly weak. Again, if you're an oil bull, you need 65 plus a barrel. Hasn't happened yet. Some stocks been doing pretty good. Google in particular, I think, had a fairly decent Friday, only ended down 0.06%, which is not too bad. And this chart continues to look pretty tasty, I think, in terms of the way that it's been recovering. Google's still probably the cheapest, at least in paper value, when you're looking at the Mag 7. And there are some, risks around it, of course, from government regulation, etc. Chinese markets have fallen, although they're getting a more increased liquidity pool. So eventually, I think China's going to turn around, but no signs of bid just yet, as we see a lot of companies, in particular the tech companies, perform kind of poorly in the earnings. And the main reason is, of course, the tariffs. So we broke below here this 23,000. That suggests that maybe we're going towards the 22. Still bullish on it medium term, that is multi months. Short term, maybe kind of looking at a little bit more negative, and 22K being a key zone to watch. Russell 2000, big trade coming through, no breakout of key resistance. It's still the 210. Can we get through the 210? 210, 210, 210. Break that. Hey, could be an inverse head and shoulders, might be deregulation, could be a couple of weeks there that could go. That'd be interesting. Russell 2000 into NASDAQ. How's the NASDAQ been going? Well, if you were to take these as 2 days, you would see you've got a high, you got a low, you got an open, you got a close. So effectively, this would be a doji. Now, as most of you guys that practice technical analysis know, dojis are effectively equilibrium. So that is that the market is at a fair value based on the current evidence. So that's what this is suggesting to us. And it is literally like, I don't know what's going to happen next kind of confusion. Can you make a case for this being resistance? Yes. Why? Because the S&P 500 hit the most traded zone and it continues to sit around that 6,000, 5,900 level. So we clearly at this point where we've talked about this before, the stats are pointing towards the upside. That is that dips will most likely be bought by the street, retail, and everybody else feeling a lot better. But at this stage, it's kind of like, are we going to break up now? Are we going to break down? Little bit of confusion here in the market showing up in this price action and also in these large trades that have gone through. Ethereum markets and crypto markets, you can see here, Ethereum tried to get above this 2,800. If it does, 3,200 would be the next spot in terms of flow, and it's still consolidating and coiling. So as long as it continues to kind of make a series of equal kind of highs and slightly higher lows with nice wicks as it goes down, I'm looking for the signs here. This is possibly one of those cases where it's patience, react, don't predict. If you have bought into some crypto saying it's breaking out, not looking shocking just yet, but if we get some kind of swipe, some kind of steal, it could be an amazing trade on crypto markets. So certainly looking for that. And as we know, Bitcoin liquidated some massive positions on it, and it's now at the level of strong demand. We give up this strong demand, next stop 95K. That's also strong demand. So right now, bulls are looking for the signs of some form of recovery. And at least on the higher timeframes, we don't have that. As we scroll down into the 2 hours and the smaller ones, you can kind of see bare base, like barely basing kind of structures. Not enough yet to go off. We will be updating on this. Guys, this week is mostly about one thing, and that is jobs numbers. We have the end of May. It's done. Sell in May and go away. Didn't work again, as we usually expect. June, notoriously pretty decent, as is July for stock markets. Stats would back that up. But we do have the jobs numbers. What exactly is going on as of Friday this week? And as you guys know, non-farm payrolls is fast becoming the number one piece of news other than tariffs in the markets. And that's going to happen at 8:30 New York time this coming Friday. So make sure, guys, to pay attention this week. We'll be covering it every single day we can. And of course, as always, subscribe down below. If you enjoyed today's video as well and you want to find out more about what we do, you can check out some of our courses, particularly the advanced class. It'll teach you a lot about the debt system. It'll blow your mind. And of course, as top of that, check us out next as well. We do post a lot of the charts we share here, and it's just great to communicate with you on other platforms as well. So fantastic. You have a great weekend, and I hope we all do very well this week. Bye for now.